Welcome back to our channel, Nomadic Investing. Today, we're diving into the world of finance to explore a common dilemma many beginners face, and that is trading versus investing. Which is best for the beginners? Stick around, and by the end of this video, you'll have a clearer idea of which path to take. First, let's talk about trading. Trading involves buying and selling financial instruments like stocks, forex, or commodities with the goal of making short-term profits. Traders might hold assets for just a few seconds or for several months, but their primary aim is to capitalize on market volatility. Here are some key aspects of trading. 1. High frequency of transactions. Traders make multiple trades daily, aiming to profit from short-term market movements. 2. Technical analysis. Traders rely heavily on charts, patterns, and technical indicators to make decisions. 3. Time commitment. Trading requires significant time and attention to monitor market conditions and execute trades. 4. Risk and reward. While trading can be profitable, it's also risky. The potential for quick gains comes with the potential for substantial losses. Now, let's shift our focus to investing. Investing involves purchasing assets like stocks, bonds, or real estate with the intention of holding them for the long term. The goal is to build wealth gradually over time through the appreciation of asset value and, in some cases, income generation through dividends or interest. Here are some key aspects of investing. 1. Long-term perspective. Investors typically hold assets for years, even decades, to benefit from long-term growth. 2. Fundamental analysis. Investors evaluate a company's financial health, industry position, and economic conditions to make decisions. 3. Lower time commitment. Once an investment is made, it requires less frequent monitoring compared to trading. 4. Risk and reward. Trading still involves risks. The potential for steady growth comes with market fluctuations. So, which is better for beginners, trading or investing? Let's weigh the pros and cons of each. Now, let's discuss pros of trading. 1. High profit potential. With the right strategy, traders can achieve significant returns in a short period. 2. Flexibility. Traders can profit in both rising and falling markets. And the trading cons are: 1. High risk. The potential for quick losses is just as high as the potential for gains. 2. Time consuming. Requires constant monitoring and quick decision making. On the other hand, investing pros are: 1. Lower risk. Historically, long-term investments tend to grow in value. 2. Passive income. Dividends and interest can provide regular income. And the cons of investing: 1. Slower growth. It takes time to see significant returns. 2. Market fluctuations. Investments can lose value in the short term. Now, you might be thinking, which is best for beginners? For beginners, the best choice depends on your goals, risk tolerance, and time commitment. If you're looking for quick gains and are willing to take on higher risk and dedicate significant time, trading might be for you. However, if you prefer a more passive approach with steady, long-term growth, investing is likely a better fit. Consider starting with investing to build your financial foundation. As you gain more experience and knowledge, you can explore trading opportunities later on. Lastly, I would like to share some tips for beginners to get started, regardless of whether you choose trading or investing. 1. Educate yourself. Learn as much as you can about the market, strategies, and tools available. 2. Start small. Begin with a small amount of money to minimize risk. 3. Practice makes you perfect. Use simulation accounts, also called demo accounts, to practice trading or investing without real money. 4. Set clear goals. Define your financial goals and choose a strategy that aligns with them. 5. Stay informed about market. Keep up with market news and trends to make informed decisions. To wrap up, both trading and investing offer unique opportunities and challenges. Your choice should align with your personal goals, risk tolerance, and lifestyle. Remember, it's not an either-or situation. You can incorporate both strategies into your financial plan over time. That's it for today. If you found this video helpful, please give it a thumbs up and share it with others who might benefit. Thanks for watching. Don't forget to subscribe for more financial tips and insights. Until next time, happy trading and investing.